Hi there and welcome to this video where I'll be giving you the broad strokes of investing in the stock market. It's aimed at someone who is perhaps interested in investing in stocks but maybe doesn't know where to start. So I want to give you the general lay of the land so you can make a decision on what is best suited to you. Now, I made this video after getting a question from someone. So if you have any questions or anything that you want to know that will help you invest in the market sooner, then please get in touch, let me know, and I might just make a video about it. So the two things to consider for a beginner are: number one, what exactly is it that you want to buy? And number two, how long do you want to hold your investment for? So I like to think of both of these things as existing on a spectrum. So you can buy anything from individual stocks to the global stock market, which will involve all the sectors from loads of different countries all around the world. And in between these two extremes, there is investing in a single sector in a country. So for example, investing in healthcare in the UK, as well as investing in a national economy, which will involve, for example, investing in the top 100 companies across all sectors of the UK economy. And then for how long you want to hold your position for, this can be day trading, so you'll be making buying and selling trades in a space of just one day. It can go up to holding your position for days to months, or for a few months, or a few years, or a few decades. Now, before I go any further, I feel I should say exactly what I do, just so that way you can take all the subsequent information with a bit of pinch of salt, knowing that that is my take on things. So my preferred strategy is investing in a global fund, and my time horizon is the longest of the five. So let's first talk about exactly what you will invest in. Now, the larger the scale of your investment, so going towards the global end, the more diversified your investment is, the more split up it is into lots of little pieces. And this has really two key benefits. The first is you're protected against any ignorance or lack of knowledge you have about the market. If you make one bad investment and you're investing in individual stocks, that can have really significant impacts on your returns. However, if you're investing in a global or national stock market, if one company does badly, it's not the end of the world. Your eggs are split between loads of different baskets. Not much of your holding is in that one company, and it's spread across all the biggest companies all over the world or all over an economy. Now, the flip side to this, of course, is that you don't have the same flexibility and you're not able to utilize any knowledge you do have. If, say, for example, you don't want to invest in a particular sector because you don't think it's going to perform very well, and you also can't pick and choose which companies you invest in to try and avoid perhaps companies that aren't going to do well, you have to invest in the whole stock market, the good and the bad bits. So you're not able to use your knowledge or any knowledge you do have if that's something that you want to do. The second way that this protects you is that it protects you against risk. Now, I want to talk about risk a little bit more because it's a really important concept to try and get your head around. The way I think of risk is really in two main categories. The first is the risk of your investment going to zero and you having nothing more to show for your money. The second type of risk is the risk of you just losing some money, and this is due to the up and down nature of the market, which is referred to as volatility. So let's first look at the risk of a total loss or losing all your investment altogether. Now, by investing in individual stocks, this is relatively high, but can be minimized by investing in large companies or blue chip companies. Then, as we diversify our portfolio more, the risk of a total loss is decreased. So investing in a sector is slightly less risky in this regard because it's fairly unlikely, compared to investing in individual stocks, that the companies in a sector will all default. Now, if we go one step up and invest in a national economy, it's even less likely that we will experience a total loss because it's quite unlikely that all the companies in an economy will collapse. And then if we go one step further and invest in the global market, we're protected against crashes in a whole national economy, because if one national economy collapses, you still have various other national economies to rely on. Now, all of these assume that capitalism is still functioning. So if capitalism were to go up in flames, then none of this would apply and you could experience a total loss, whichever your investment. So with that aspect of risk dealt with, let's look at the risk of losing money due to volatility. Now, any investment in stocks is volatile, whether you're invested in an individual company or whether you're diversified to a global extent. A global investment is relatively less volatile than an individual stock, generally speaking, but nevertheless, they're all volatile. And that is what people mean when they say that investing in the stock market is risky, because over the short term, it's not unlikely that you will lose money. Now, what I mean by the short term actually might not come across as a short term to you. What I mean is that over the period of actually a few years, it's not unlikely that you will lose money. And this kind of hints at the solution or the way to protect yourself from this. If you invest for a longer time horizon, and by this I mean 1, 2, 3 decades, then you are protected against volatility and the risk that it brings. The evidence for this is that historically there has been no 20-year period in which the American overall stock market has made a loss. So I hope that explains risk a little bit and how what you buy can affect risk. Now, what's also important is how long you hold your position for. So let's look a little bit at those different options. Now, on one end of the spectrum, we have day trading. Now, I don't know much about this, and in fact, I don't really encourage people to look at this because the overwhelming majority of people who try this strategy lose money. That's not to say that it's not possible to profit, but you just have to be careful and make sure you know what you're doing. The other reason I don't particularly like day trading is that it's much more active than investing for a longer time horizon. By this, I mean, if you want to profit or make any money, you have to sit down at your computer, look at the screen and make trades and make decisions. Whereas if you invest with a horizon of years to decades, then it doesn't matter where in the world you are, it doesn't matter what you're doing, your position is still going to be there and it's still going to be working for you, so that when you do eventually sell in years to come, your work will have added up over all of that time without you having to do anything. However, the flip side to investing for the very long term is that you're not going to see any profits for a very long time. You are committing to not touching your money for years or decades, and this might be easier said than done, especially when you consider the mental aspect of holding a position and seeing it drop in value and effectively you losing money. When you're investing for years to decades, you need to commit to not touch your money no matter what happens. In this respect, it kind of helps to actually not know too much about what's going on, because if you don't know what's going on, then you're not going to be getting scared and selling when your money is losing value. Now, as I said, this is something that I believe in and I am committed to. So I have invested in a global share of the market with a view of holding that position for years to decades. In fact, my view is to hold that until the day I retire. Now, I'm sure that you can infer that if you're going to invest for sort of like the medium term, it's going to involve a trade-off of these things. The thing I would add is that if you're investing for months to years, you do have to do some added research compared to investing for the very long term in order to be sure that when the time is up, you will have made a profit. That's not quite the same as the so-called dumb money that can just put money into a global or national market and be quite confident without doing any research that after 20 to 30 years, they will have made a profit. If you're investing for a shorter time horizon than that, then you do need to do a bit of research to be sure that by the time you want to take your money out, that you won't have made a loss. That's it from me for this video. Thank you ever so much for watching, and I sincerely hope you enjoyed.